Well, thank you very much for joining us today. Here we are at the middle of the week already. I'm Marlin, Bohling, your tour guide to the ag commodities. Well, Janet was talking earlier about the Pro Farmer Crop Tour results and how things have been going overall. Seems like maybe a lot of the scouts have been somewhat disappointed with what they are finding compared to what they expected to find. They knew they would find bad conditions in the western Corn Belt, but it was kind of surprising that yesterday in the central part of the Corn Belt, maybe there was too much of that evil phrase tip back that they saw where they weren't really expecting it. So that automatically kind of trims off what I figured 10 to 15% of the yield in those fields like that, and it's more widespread than they thought. So the markets reacted strongly overnight once again, kind of unusual for during that particular crop tour. Normally they kind of ease back, not this year. Also, just as I was coming down to the studio, I got some new news, and I'll get to that in a second. So here is a look at the corn. Overnight, we had September corn lifting again by 9.5 cents at $6.69.5. That's within about a couple of pennies of our high of the overnight trade, about a dime off of its overnight low. December corn was 9.5 higher at $6.64 3/4. If you take a look at the soybean trade overnight, here you had some fairly sizable gains again, led by that nearby September contract, which usually means immediate demand, right? November soybeans 15 3/4 higher at 14.76 3/4. That's generally considered your new crop month. Now, with the soybean screen up so you can see it for those of you watching at home, I want to add this little tidbit. As I was coming down here just a couple of minutes ago, a new export sale was announced overnight by USDA, and it was the soybeans. And check this one out, a sale of 517,000 tons to China. That's a fairly sizable amount, and yesterday we had a sale of 110,000 tons to China. So, you know, you combine a couple of days, now we're looking at about 2/3 of a million tons all of a sudden that they're in there buying. So a sizable move overnight, and things are looking totally different than what they did a week ago. Now, on the wheat market, let's see what's going on there. They have really been firming up. In Chicago, September up 9 at 7.91 3/4. In Kansas City, you have September going up by 18 1/4. Look at that. It's over $9 now, $9 3/4 of a cent. And December was up 15 cents. Minneapolis wheat, September was 12 higher at 9.12. December also 12 higher in the overnight trade. Well, Chris Swift joins us now. He's with Swift Trading. He's based in Nashville. And Chris, we are getting some developments that are all starting to lean toward the bullish side, if you will. And that's kind of interesting as we're heading into harvest coming up just right around the corner right now. These China buys, does that mean they think the low may be in?
Well, it's a combination of everything, Marlin, and clearly the heat has been what has seemingly been the disaster to the corn more so than the drought areas of it, because we've seen even irrigated corn have some issues to it as well, and that tends to be the heat. With China's still out there needing everything. This morning we saw where they were going to hand out over $10 billion in agricultural subsidies to various different states there in China. So we heard last week, or maybe even the week before, it said, don't pay attention to what China says, pay attention to what China does. China's buying grains because they need grains, and they're helping out their own country here by giving out more subsidies to try to produce those grains. And until they get it, the U.S. is the source for it.
Well, and their historic drought going on right now that is the worst in, 61 years, it's kind of putting a dent in their own production right now, too.
That in Europe as well. You know,
yeah.
All of around the world is having some kind of shortages in some ways. And I think as we push through, it tells you how important it's going to be when we get into the spring of next year, before we even see what the next year's crop can be. We'll already be somewhat short of inventory.
Okay, we'll take a break right here, and Chris will take a look at what to expect on the livestock side here on a Wednesday when we come back. All right, let's go back to Chris Swift and talk about livestock here on a Wednesday. Chris, with the big run up that we have had in the grains this week, it's getting a little harder for livestock producers to protect their bottom line. How do you do that?
You know, I think one of what they have to pay attention to more than anything is the spreads. The basis spreads have been very beneficial to them. They've been a negative basis in the cattle for quite a while, giving them premiums over what they're able to buy into the at the current price right now. So I think when they look at that, you need some kind of protection on just to make sure, because we now see we're changing our aspects in the corn market once again. That will definitively change the cattle market.
Do you think those spreads that, well, I'm showing them on the screen right now, the nearbys, let's go with October. It's at 144.60 yesterday on the close. That was up a dime, but you compare that to April and it's up there at 158.27. Do you think those are going to close together or not anytime?
Well, probably not anytime soon they won't. What I'm looking at is the convergence of basis between the cash and the futures more than anything.
Okay.
So what we probably are not going to see is another big surge in the cash market. We're not seeing box beef prices rise. We're not seeing the consumer want to increase their willingness to pay a higher price or consume more. So it's kind of difficult without that consumer to pay more higher prices for to see any more money coming into the industry right now.
Feeders really got beat up yesterday. September down $1.90, and October and beyond, we're over $2 lower. Do you see more of that today if grains stay high?
I think you do, and it could be even worse because now that we're seeing that we paid significant prices for the last 3 months of feeder cattle, and now you're going to have to feed them even higher feed costs if you don't get something done quick.
On the lean hog trade, just to remember, yesterday we closed with October down $1.07 at 92.90, and December was down 25 cents. We'll see how things open up here in a little bit. Thank you, Chris, for the comments today. Chris Swift of Swift Trading. He's based in Nashville. Janet, another exciting session getting ready to begin.